our home buyer seminar. My name is Sly Marinka. I'm a branch manager with Cross Country Mortgage in offices in Antioch, Illinois, McHenry, Illinois, and Lindenhurst, Illinois. Today we have Mary Shep with Brightway Insurance. We have Akila Allen, Dan Gleason, Jennifer Beltrami, and Dawn Bremer. They're all with the Bremer team, Keller Williams in McHenry. And we want to thank you for joining our chat. We are going to basically go over some of the things that we're seeing in the industry, real estate industry as a whole, and just kind of, explaining some of the things we're seeing. And if anyone has any questions, don't hesitate to reach out, post something in the chat, say hi, and I get to go first. So one of the questions that we've been seeing quite a bit people are asking, is it a good time to get a mortgage right now? And I guess that question is kind of loaded a little bit because what's the alternative? When we're looking at mortgage rates, they are a little bit higher than they were over the last couple of years where they were historically low, but we need to look at rents. And most people either have to pay a mortgage or they have to rent. I did a quick search of just McHenry, Illinois, earlier, and I found one house for rent in McHenry, and it's a 3-bedroom, 1,520 square foot, 1-bathroom home that is listed for $2,045 a month. So historically, rents are the highest they've ever been, and that plays a factor in whether or not getting a mortgage right now is a good idea. For me, I would personally rather build my equity by paying my own mortgage than paying someone else's. Also, if you look at historical rents, they've increased at a rate of 8.85% annually since 1980. So the longer you rent, the more you're going to pay. Traditionally, it's best to own your home from a wealth standpoint. So yes, I do think it is a good time to get a mortgage right now because you could always hopefully refinance down the road and get a lower rate if rates do come down. So is it a good time to get a mortgage right now? In my opinion, yes. Next, we have Dan Gleason with the Bremer team.
Thank you, Sly. Appreciate that. Is now a good time to buy a home, or are homes overpriced? And will I continue to gain value in my home if I buy a house now? That's a really good question. It comes up all the time with clients that we work with. And the answer is yes. It's always a good time to buy your home if you can. For some of the reasons Sly just spoke about when talking about the rental market. Currently, rents are higher than they've ever been. Like he said, why pay somebody else's mortgage when you can build equity and pay your own? With that said, even with rates being higher than they have been in the last few years, just some numbers for you as to why home prices are continuing to increase. And the sooner you can get into a home, the better you're going to be, because in McHenry County, over the last 12 months, there's been a 22.5% decrease in the inventory of homes that are available to purchase. It's a supply and demand situation. There's very little supply of homes, and there's a high demand for people that want to buy it. So the cost of the home has gone up 5.6%, even with the higher interest rates now. And the home prices are continuing to go up. You also see that in Lake County, it's very similar. It's actually, the numbers are a little higher in Lake County. As far as inventory is less, and the home prices have gone up even more. So when you couple that in, if you can get into a home now, it's absolutely a great time. It's always a good time to own something and start building your equity and working on your own personal wealth in your future. So other than that, again, if you have any questions on that, always feel free to reach out to us. And with that, we'll go to Mary Shep with Brightway Insurance.
Thanks, Dan. For our side on the insurance, the common question almost daily is, I have been a loyal customer. I have no claims. Why are my premiums going up, and what can I do about it? There's a ton of driving factors that have insurance going up right now, and many of them are not even related to the clients at all. 30 to 45% construction cost increases to reconstruct your home. Heaven forbid you had a total loss. Lumber is up 6.2%, asphalt roofing up 16.3%. So all of these costs are part of the reason that drive your insurance premiums up. Your auto premiums are not excluded from that. You know, we're talking about home buying and versus renting, which I agree with everything you guys said. If you have the option, you can, I would definitely go in the buying direction because rents are through the roof. And it just because the insurance premiums are going up doesn't mean that you don't have options. And the cost of new cars and used cars has gone up. So the cost to replace them and repair them has gone up. And what can you do about them? I heavily advise that you get quotes, you shop, you get independent agents. And that's one thing at Brightway that we can do is be an independent agent to shop through multiple carriers. So if, you know, it doesn't hurt or cost you anything to shop a loans or shop your insurance prices and your premiums to see what options you have out there, because you'd be surprised how many options there are beyond just a captive carrier.
Perfect. So next, I will talk a little bit about what interest rates are doing, what they have done, kind of where they're going. And, you know, people ask, what are rates going to do? Obviously, we don't have a crystal ball, but we could certainly look at statistics and kind of get a better idea of what we're looking at. And the biggest factor that has driven rates up is inflation. In 2020, inflation was at 0.1%. And it rose through 2021 up to as high as 9.1%. And since June of 2022, inflation has slowly been coming down, and mortgage rates typically follow that. So we haven't seen a huge decrease in rates. They did go up. They went up very fast, but they've kind of leveled off. We haven't seen them go double digits or anything like that in most cases. So we do see inflation cooling, which means that we hopefully will see rates to continue to come down. And Fannie Mae does predict the 30-year fixed for 2024 to average around 5.6%. Right now, we're sitting around 6.75, 6.625, somewhere in there, depending on the day and the credit score and everything else. But we do hope and think that rates will come down. So buying now will get you locked in. As Dan said, it's a supply and demand issue. There's way more buyers than there are homes for sale. So, you know, the prices are continuing to rise. You could get locked in now and always hope to be able to refinance down the road and take advantage of lower rates when they become available. You know, we were at historic lows in interest rates for a couple of years. So we're still below that. The average interest rate from 1971 until today, if you took an average, is 7.74%. So historically, we're still below that. Hopefully they keep coming down. And if you buy now, hopefully be able to refinance down the road. So again, take it with a grain of salt. We're not sure, but we hope and we think that rates will continue to come down. And next is Jen on our list.
Thanks, Sly. So this is a question that we get all the time. Lots of times people are concerned about getting pre-approved because they think it's going to affect their credit, and it's going to affect your credit to some extent, but it's not going to like tank your credit. And the reason that it's important, especially in a market like this where supply is so low and demand is high and the competition is very fierce, being pre-approved, especially having not just being pre-approved, but being pre-qualified, meaning you have a relationship with a lender and that lender is going to go above and beyond to really get you past all of the hurdles up to the point that you just need to find a property and get it under contract, and they're going to do an appraisal and you're moving ahead. Having that relationship with a lender can get somebody who will make a phone call for you to a listing agent after your buyer's agent presents their offer and say, hey, I know you just got a contract from my client, Sue Smith, and I just want to let you know I've already done this, that, the other. I've qualified her and she's ready to roll. That can help you win the offer at the end of the day when you're up against multiple people and you've got a situation where it's a very competitive market. Another reason it's really important is when you're working with your buyer's agent, we need to know what kind of homes you can see. If you are able to use a conventional loan product, you're able to purchase pretty much any home out there unless it needs to be a cash only purchase because of condition. But if you're an FHA buyer or a VA buyer, there's condition issues in homes that agents will know could cause problems in your lending process. And we need to steer away from those homes. It also will preclude you from being able to buy certain townhouses and condos because those won't work with an FHA or a VA product because there's a process that FHA especially has to go through with condo associations and HOAs. And if they don't go through that process, you can't buy a house there with that product unless you do what do they call it, Sly? The on-site, the FHA where you
Spot
can
approval.
Yeah, the spot approval, which my experience, and I think you've had the same thing, it doesn't really work, right?
No,
So
very limited.
we need to know, are you an FHA buyer? If this HOA is not hasn't been approved by FHA, we might as well just stay away from it and keep looking for other houses. So it'll keep you from wasting your time. And most importantly, you need to know what your budget is. And an experienced lender is not just going to talk to you about a price point. They're going to talk to you about a monthly payment amount. This is the monthly payment amount based on your income and your debt that you're going to be able to afford. And they're going to be able to talk to your agent about that and say, listen, Jennifer, I've talked to this person. This is the monthly payment that they can get. That means you need to work with them to find a property that's probably in this range, but most importantly, keep their taxes within this range. And if it's something where it's a conventional buyer, if they're going to do an HOA, we need to take that into consideration. And when you have an experienced lender and you already have a relationship, your agent and you can send properties to that person and say, hey, Sly, I want to look at this house. It looks like it's really a great house. Am I going to qualify for this house? And they'll shoot you back a message and say, yes, as long as you purchase under this amount of money. So it just really makes the whole process way less stressful for you because you know what you're doing, you know what you can do, and you and your agent are able to put forth the best offer and hopefully win the day for you when it comes to multiple offer situation. All right, we're kicking it back to Sly.
Mary.
Oh, Mary. Sorry, Mary.
That's okay. Let's see here. So one of the other questions that we have is, what are the key coverages and coverage options I should pay attention to on my policy? So this is a big one because a lot of times, everybody sees them, the Progressive, the Geico, the .com commercials on TV, that you can sign up for your own insurance policies online. You can do it yourself. And a lot of times people, unfortunately, and not, surprisingly, are premium driven. So you click on the best premium that you like, not realizing that those coverages underneath it matter. And you think that, things like your roof and water backup and animal liability are all covered, and they're not. Those are coverages that are optional. So, when it comes to your roof, you don't automatically assume that your roof is covered. It's always covered to an extent, but there's a difference between a full replacement cost and a cash value or a scheduled roof. So if your roof is older and you're not paying in your premium or you haven't selected for the endorsement for replacement cost, if you have a claim, then they can come back and say, you have depreciated value, so we're only going to give you a few $1,000s for your roof replacement, not the entire replacement cost. So when you're not paying attention and surrounded by people that are advising on these things for you, you can miss out on those things, and it makes a huge difference. And then water backup. There's different kinds of water damage that can happen to your house, and not all of it is automatically covered under your policy. Most people know about, your basic plumbing break. If your sink breaks and floods water in your kitchen, that falls under your main policy. If a lake is nearby and you're in a flood zone, usually your realtor is going to be the one that tells you you have to get a flood policy. Your lender is going to back that up and say, we pulled this, you need a flood policy. But if your sump pump fails and it backs up and floods your full finished basement and you don't have that endorsement on there, you might have none or very little coverage to cover that replacement to be able to fix all of that damaged property down there. So whether you need a lot or a little, those are the kinds of things that you can miss by just clicking through to find the cheapest premium to save a little bit of money when the time comes and you have a claim and you're not covered. The other one that a lot of people forget about is animal liability. It's not just pit bulls that need animal liability. If you own a dog, most carriers are going to make you disclose that. And if you have the smallest little dog bite or anything like that on your property, you don't have those coverages and you're a dog owner, it could be a huge claim that you're just not expecting. And unfortunately, those things that, you don't watch for, it's always a good idea to at least have somebody advise and look at your policies. And when you work with professionals, a lot of times your real estate officer or your real estate agent and your loan officer are going to take the time to actually look at those for you and say, hey, you might want to get a better opinion. But it's always worth looking at your key coverages to see. And if you ever have any questions, you can always ask.
Awesome. Thank you, Mary. So one of the things that in my line of work, we constantly see is a misconception that people think you need 20% to put down. When my grandparents bought a house, or even my parents, that used to be the case, is you had to save forever and you had to put a big chunk of change down to get a bank to even look at you. But over time, that has kind of gone away. Now, is it a good idea to save and put more down? Well, yeah. I mean, you get a cheaper mortgage payment if you're able to do that. And some of the terms can be more favorable, but that's not necessarily the case. You don't always have to do that. In fact, we have all kinds of tools, first-time home buyer loans. There's FHA, which is a government-insured loan. There's VA loans for veterans. There's USDA loans for rural housing. There's all kinds of programs that we could look at depending on your specific qualifications to get you into a home without having to put 20% down. So it's best to talk to a good lender that has all the tools and all the products available, and just do as Jen said, get pre-approved so you kind of know what you're getting yourself into. And then we can explore all those products. And if we do it all the time, regularly, where people have to come up with either nothing or very little for a down payment. And going back to the rents, since it is so competitive in the rental market, a lot of times you have to put 2 or 3 months of rent up front. So if it's a $2,000 a month rent, that's $4,000 to $6,000 you're coming up with out of pocket to even secure your rental. You could apply that to a mortgage and maybe put a little bit on top of that and do a 3% down conventional loan or a 3.5% down FHA loan. So it's very important to have that conversation to kind of figure out exactly where you stand from a credit standpoint and from debt to income ratio standpoint. And we could see what program kind of works best for you. And if it does end up being minimal down payment, we have those solutions. So I want to leave you with a statistic that I found staggering. And it's from 2019, so it's a couple years old, and it's probably an even bigger difference now. But in 2019, the median U.S. homeowner's net worth was $255,000. At the same time, the median renter's net worth was $6,300. So that's a 40 times difference between the average person that is renting versus the person that owns their home and has built equity over time. So definitely something to think about. You don't have to put 20% down. Have a conversation with a good local loan officer that has all the tools to be able to help you get into a home and pay your own mortgage instead of someone else's. And with that, we turn it over to our fearless leader, Dawn, from the Bremer team.
Nope, actually Akila.
Oh, I'm sorry, Akila, my bad.
No worries. So my question is, what's something I can do to stand out when making an offer on a home? So first and foremost, you want to make sure that you are pre-approved. You have a pre-approved and you understand what your pre-approval is stating, what your budget is, how much your down payment is, and what type of loan you are pre-approved for, whether that's an FHA loan, which is typically the first-time home buyer's loan, a VA loan, which is a veteran's loan, or a conventional loan. In today's market, you also want to be prepared to offer at listing price or over listing price. And I say today's market because that could easily change next month. It was not the case a few years ago. Today, you want to make sure you're ready to offer over listing price or at listing price. If you are making an offer over listing price, meaning you're offering more than what they're asking, you want to talk to your realtor about an appraisal gap. An appraisal gap is basically saying that if your home appraises for less than what you're offering to pay, you will make up the difference in cash. Now, if you're able to afford that, definitely talk to your realtor, let them know, let's do this. If you're not, say, hey, I can't do an appraisal gap. Let's just, leave it off. You also want to look at an escalation clause. In today's market, there's a lot of multiple offers going in on homes. An escalation clause states that you are willing to put in an offer and then you offer so much over the next person's offer. So you put in $155,000 on a $150,000 home. And you'll say, if someone outbids me, I'll go $1,000 over that up until, say, 185. That way you have a better chance of winning that bidding war. You also want to be prepared and be realistic that you're not going to get closing costs. Unfortunately, it's not 2019 anymore. Closing costs from the seller are extremely rare. It still happens, but it's extremely rare and you most likely will not win that offer. You also want to offer a rent back. If someone's selling their home, they usually need to buy a new home. They have to move somewhere, most likely. And that means that they have to find a new home. If you're offering a rent back, you're saying that after we close, you can stay in the home for so many days, virtually paying you rent until they find their home, and then you can take possession of that home after the fact. I would say also, this is very popular. We see it on TV and Netflix and the home flippers all the time. Do not write a love letter to the sellers. That opens you and the sellers up to fair housing violations, meaning that if you say, oh, we're a great couple and we have so many kids, and you're just going on and on about why you'd be such a great fit for this home, and you don't get that home, you can easily go back and say, hey, they discriminated against me because of XYZ. So most sellers don't even look at the love letters. Most agents say do not send the love letters. I also do not advise waiving the inspection. You never want to waive the inspection, even if the home is saying we're only looking at as-is offers, because you always want to know what you're walking into. Yes, it's your dream home. Yes, it's beautiful on the outside. Everything, you walk in, everything looks great, but once you open up a pipe or you open up a wall, you don't know what you're going to get. So it's just important to know what you're signing up for when you find that dream home. If there isn't any additional questions, I'm going to kick it to Dawn.
Thank you. Thank you, everybody, for all of your great questions. We did have a question that came across that said, what can I do to get my house ready to list? It's actually a really great question. One of the things that you should do is clearly have an expert real estate agent come out to the home, walk through it. Some of the stuff that we do is walk through, go through each room, and give you some suggestions of minor things. We don't want you spending a lot of money, and especially in this market, it's definitely not something that is needed. So you want to have somebody go room by room, maybe do some staging with your own stuff, maybe do some cleanup of the exterior, some fresh paint, some fresh linen, anything that we can do to make it look a little spiffy. So those are some of the things that we need to do. And what we wanted to do to end this is just to say thank you for being there with us. If you are looking for insurance, you can get a hold of Mary Shep from Brightway Insurance. You can reach her at 224-329-0495. Her number's on the screen. And if you are looking for a mortgage, you can reach out to Sly Marinka from Cross Country Mortgage at 847-722-1775. And of course, if you're looking to buy or sell, give us a call, the Bremer team, 847-456-6334. Wanted to also invite you to our Friday night, July 7th from 5 to 7. The Bremer team will be at the McHenry Outdoor Theater. You can see all of us passing out some great giveaways. And don't forget, on Mondays at the McHenry Outdoor Theater, it's free popcorn on the house from the Bremer team. Thanks, everybody, for tuning in. We'll see you soon.